Hi, my name is Chris Bird and I'm an instructor for the Keynote series, and I'd like to tell you about a course that I have taught for them called Tax Considerations of Home Ownership. This is a really important course for realtors to take because purchasing a home can be one of the most significant large investments that many people make in their lifetime. So they need to be aware of the whys and the wherefores and what the benefits are. And these benefits primarily amount to deductions like the home mortgage interest deduction and the deduction for real estate taxes. And what a lot of people don't realize is that by claiming those two deductions, that opens so many other deductions on the income tax return. For example, charitable contributions, state and local income taxes, things like that. So that's why they want to take this course. And the other issue from a financial planning standpoint is that generally the sale of a home ends up being a non-taxable event. Why? Because if the owners have lived in that house for 2 of the last 5 years before selling their principal residence, then the gain in the amount of $250,000 if they're single and $500,000 if they're married is basically tax-free. I can't tell you since 1997, when this law became effective, how many people I've known that have bought and sold principal residences every 2 or 3 years in that time frame and basically made tax-free cash during that time frame. Now, the other issue, a tip I'd like to give you, is about first, keeping good records, and secondly, for the realtors to keep a copy of the HUD-1 document on each side of a transaction that they handle and represent for a client. So whether the realtor has the buyer or the seller, I want them to keep a copy of the HUD-1 RESPA closing document. Why? To send to the client in January every year so that the client can give it to the accountant for the seller or the buyer of the home. Any good accountant is going to want to see and have a copy of that HUD-1 document for purposes of preparing a tax return. The other tip I'd like to give you is about record keeping. This law became effective May 6th of 1997 about the $250,000 and the $500,000 exclusion from gain from tax when they sell a house. Congress could take that away as quickly as they created this tax, and while I don't think that's going to happen, who knows what future Congresses could do. So I'd like to give a plug for our course. It's a wonderful course in the Keynote series, Tax Considerations of Home Ownership, and I encourage you to have realtors take this course. Thanks, and I hope to see you.